Hello guys, good morning. Now, this week's we try to see that the market has gone down too much, especially on Friday, and a lot of my subscribers, of my students, and those who ordered my training, they asked me, okay, we need to know what to do in these times of when the market is down, and it's going down as we saw it last week. So if you are going long, like trading, the only thing I know, you should put stop loss. Most of the time, I don't say just most, but almost of the time, if there is a big major move in the market down, for example, all your stop loss are met. It means you exit the trade. Now, some people get frustrated when they get out of the market and they say, oh, all my stop loss get filled. Oh, I lost money. What? Try to think, if you have stayed more in the market, what will happen to you? Instead of losing 1% or 2 or 5% of your money, you will be losing 10, 20, 30% of your money. Check Facebook last week. Okay? So don't play. And I always say, millions of times in all my videos, if you are trading, put a stop loss. This stop loss will make it easy for you to exit in the right moment and not to stay too much. Because if you stay too much, what will happen to you? You will have a big loss or big losses. Now, what does it mean, a big loss? A big loss, it means the market has taken too much money from your account. Instead of giving $100, $200, you will be giving $1,000, $2,000, or $3,000, or wherever money you have in your account. So you tell me, oh, it's just the market. No, the market, it's always doing the same as it does 200 or 300 or 500 years ago. It's the same thing. Some stocks go up, some stocks go down. Sometimes the market is up. This is what we call bull market. Sometimes the stock is going down, and this is called bear market. It is just in general words. It doesn't mean when it is a bull market that all the stocks go up. You will find stocks that go down. And in bear market, it doesn't mean that all the stocks will go down. You will find some stocks that go up. Excuse me just a minute, drink some coffee. So, if you have watched my videos for these 2 years, you will understand, as I told you before, from the first videos I did to now, that our main goal first, before we make money in the market, is to preserve our capital. This is the first job that you have. Not to make money. The first is to conserve or preserve your money. How do you preserve your money? You don't give too much money or a lot of money from your account to other traders or to the market in general, what we call the market. Now, how is that? If you put stop loss, you limit the loss. For example, you put stop loss to lose, let's say, $100. Okay, the market will take only $100 or 110 or 105, depending on the market volatility, but it will not take 200 or 500 or 1,000. Okay, so you control what to give to the market. But if you are right, okay, you can make more money than this 100. Now, For those who did not put a stop loss, I know it is a big pain. And from last week, you see how the market is going down. Some other people think that the market, oh, it's just small correction, it will go up. So no one knows. So next week or tomorrow, today is Sunday, tomorrow we will try to see if it is just a small correction and the market will go up again, or it is a downtrend. A downtrend, what does it mean? It means the whole market will be going down and down and down and down, depending on the downtrend. Okay, so a lot of people think about right now, since the market, most of the market is going down, so they think to do either shorting, it means sell short a stock, or to do option puts. I always ask beginners not to go to this thing like shorting the stocks and options. Now why? Because the risk is more than when you buy a stock. Okay, the risk is bigger. That's why you should understand the mechanism of how these things work, like shorting the stock. Shorting the stock, I have done level 11 in my training, and it explains one technique of day trading and one technique of swing trading, how to sell short a stock. Okay, you can do it with a stock or with an index, or like an index, an ETF, or whatever you want to do. Now I explained a lot of things in that level. If you are interested just to know what is shorting or how to sell short a stock and what are the risks, you can just go there to my website and go directly to level 11, and then you buy it. Now there is another thing you can do when the market is down, is to buy what we call puts. Now a put, what is it? A put option, what is it? It's just a contract. It could be 1 month or 2 months or 6 months or 1 year. The more you stay in the market, the more you pay what you call a premium. Okay, you pay a premium for this. Now what do you get? You get the whole stock, which is 100 shares, which is a lot. You get it for cheap. I just give you an example, but you should see the real option in order to get the price. Okay, let's say 100 shares or of a stock, let's say it is $1,000. Okay, just an example. $1,000, what does it mean? It means that the stock is $10. You put, instead of putting $1,000 to buy this stock, to go long, it means you think that the stock is going up. Now in option, you can buy this $1,000, you buy it with $50 or $20 or $30, depending on the option put. How much is it? Okay, it is shown. It's the same as a stock. It will show, for example, $1 or 50 cents or 20 cents or wherever. Okay. Now, what does it mean when you buy this? Put? You bet on the market that this stock will go down. So instead of shorting the stock, let's say you want to short the stock, and you put $1,000 at the same time, you don't want to put all this 1,000. So you buy what you call a put. Now when you buy a put, if the stock is going down for 1 month or 2 or 3, depending on the strike depending on how much you want to stay in the how much you want to stay in the trade. If the stock is going down, you will make money from this $50. You can make $20 or 40 or 50 or 60. So the more contracts you buy, the more money you make if the stock is going down. But here is the trick. If you lose, if the stock, instead of going down, it goes up, all this option will be worthless. What does it mean? It means you will lose this $50 that you put, or you lose 40 until, because in this put there is you buy time and you buy the contract. So if you, for example, you stay 2 months or 3 months or 6 months or 1 year, you will pay more money. You don't pay, for example, $50, but let's say you pay $150 or $200, but you stay the whole year. Okay? You stay the whole year. If the stock is going down and down and down and down, you are sure to make money. If the stock is going the opposite way, you lose this $100, $200 that you put. So if you are a beginner, don't buy only one and try just to try. The good thing in trading is that you try things and you see what's good for you. If you succeed in one thing, you will make it for a living, and then you can make money. But until you understand everything, it's not just what we call a quick rich scheme where you want a sure thing. There is no sure thing in the market. I always say, and I'm saying it, and I will say it in the future. So I will not say the opposite. So a lot of subscribers telling me what to do. So either you short or you buy puts. Okay, put, which is an option. Now for shorting a stock, I have made training number 11. Now for options, I will try to make another level just for beginners, just to begin with this, and I will explain into details what are the things that you should do and what are the risks that you did in your that you will get from buying puts or buying calls if the market is going up. But in our case, it's puts because it's going down. Okay, but if you, let's say if you buy a put, you think the stock is going down and then it goes up, you will be losing all that money that you put. So that's why I told you always, don't put too much money in the market. Put just a little bit. Don't be greedy. Okay? Because when you become greedy, you think that there is a sure thing, and then you be putting too much money in the market, and then you get disappointed and you lose a big chunk of your money. That's why always trade what we call safe. Not safely, but safe. It means try to control your risk. Okay, I want to risk $100. That's it. I buy a put and I risk this $100. Okay, I bet on it that the stock will go down and the market is going down, and it could happen. So if the stock is going down in the next week or the other week, I will be making money. Okay, this is a sure thing if the stock is going down. Now, if the stock is going up, understand that you are losing this $100. And this is good for the beginners because you just have a feeling. And please don't use this virtual simulation thing. You can do it, but you can't feel the money. In trading, you can't feel trading until you trade for real money. Now, why is that? Because of your feelings. Okay? You buy a stock, you think that the stock will go up, and then few days it goes down, and then your feelings comes. And you think, you say, I know that the stock will go down, but it will go up. Now, here you make a big mistake. Because you assume the stock will go up. And this is the future. No one knows the future. Because you have done the first mistake. You are wrong. You buy the stock, you think it's going up. But after a few days it goes down. This is the first mistake. Okay? It's in trading, it's not a mistake. It's just to be right or wrong. So you say you are wrong. And it's okay when you are wrong. You should put stop loss and you exit the trade. But the problem is that a lot of beginners, what they do, they say, no, I am right. It's just because these days the stock go down, it doesn't mean that it will go down forever and it will go up again. And this is the second, or what we call a big mistake. Okay? A big mistake. Because in here, at first, when you buy a stock to go long, it means you think that the stock is going up. You will, if you put stop loss, to lose like $100, $200, or $150 or $50, wherever you want to lose. So this is just to give to the market because you are wrong the first time. But if you don't put stop loss and you stay with the trade, what will happen? Let's say the stock go down and down and down. You will have what we call a big loss. You put $1,000 in a stock. Let's say you buy 100 shares of a stock, which is $10. You put $1,000. Okay? Instead of losing $50 or $70 or $100 or whatever, you will be losing $200, $300, $500, and you lose a lot of money. This is called a big loss. And a trader who does big losses will never succeed in his life. A life of trading. I'm not speaking about personal life or professional life that you do with your job. No, I'm speaking about trading. Because the trading business is different from the other businesses in the world. There are things that you can do in the stock market that you can't do outside. Like, for example, shorting. You can do it only in the stock market. You sell other people's shares, and if they go down, you make money. Where have you seen this? You see it, and you will see it only in the stock market. That's why they call it stock market is illogical. Yes, it's illogical because things... it doesn't happen for logic. It means it's not because a stock has good earnings that the stock will go up. It's not because there is a war in another country that the stock will go down. Maybe it go up. So always we have surprises, and these surprises is the market. People, they do whatever they want because they are free. Someone who is $1 billion, he is free to short a stock or to buy long, and these big guys change the market. You can't change the market. You have 1,000 or 5,000, 10,000, 100,000, you can't change nothing. Okay? Because you have little money. But people with millions of dollars or billions of dollars, if they do something in the market, it is seen. And the market will move according to what they did. For example, these days, let's say if there is a big sell-off in the market, there are other people who short the stocks. So we have a double thing, a double pressure on the price. Some people are selling and some people are pushing the market down in order to make money. Okay, so they don't push the money just for fun. People are doing this to make money. As they go long to make money, they can go down and make money. And this is the market. Okay, the market has two faces, either going up or going down. If it goes up and the market is good, you can make money. If the market is going down and you short or you buy puts, you make money also. Okay? Other things, a lot of people, they ask me about candlesticks and how do they look in the chart, and the different frames, time frames. I will make a level for that, and people who are interested to just to know what's this candlestick and how to trade, especially for those who do day trading, it's very good for them. For swing trading, it's also, but it just show you how the price moves, and that you get a feeling from the chart how to trade. Okay, how to trade. And a lot of people, they have asked me this, so I will try to make some level and try to make some videos for those guys. And I will be making some a level for option, because the market is going down for these days, and maybe some people want to buy put to use it and just to try it. And this is how you learn things. You learn things when things change. When the market is going up, you think always to buy stocks or to buy calls in options, and you stay with it, and you see yourself. If the market is going up, you make money. If the market is going down, there are two ways to do it. Either you short sell a stock or you sell short a stock. It means you sell shares of other people, and the market is going down, you make money. Or you can buy what we call puts in options, and then if the stock is going down, this put is going down also. It works in parallel with the price of the stock, but it's not the same. It's not the same movement, but you can make money from it when you buy these puts. Okay, so please give me some time to make all this work, and for you guys. And if you have questions, as always, you ask questions. And we'll try to answer them according to my time. And I hope you are safe in these days. Don't buy long in these days. The market is so volatile, so just wait 1 week or 2 or 3, and then we see where the market is heading. Is it just a small correction where the stock is going down a little bit 1 week or 2 and then it goes up, or is it a downtrend? A downtrend is the opposite of an uptrend, or what we call in general, some people they call it a bear market, which is going to be in the future, or if it is the opposite, going up, it's called a bull market. It's just names, but for us, I prefer to use uptrend and downtrend, because stocks are different. Sometimes you find stocks that are going almost going down, and you find few that are going up. Few, not most. Now, this is all for this video. If you have questions or you have comments, just write them here on the comment section here under the video. If you need me in something, send me a private message, and the email is on the top of the description of this video, and just send me an email. And thumb it up or subscribe if you don't, and thank you very much.